morning, guys. Steve here from the turtlefollower.com with the weekend update for September 20th, 2014. So Friday proved to be a typical Friday. We had some higher movement during the day, and then towards the end of the day, especially that it was options expiration, we ended up closing lower in the final couple hours of trading. Again, nothing to really look at that may potentially signal a reversal. I just think it was more of Friday options expiration. But if we look at the S&P 500, you can see we got that breakout from the consolidation and that downtrend channel that we had. Sure enough, pushed higher up into 2015 and then closed right at 2000 on Friday afternoon. So moving forward, you can see on the weekly chart the trend is still higher. We're still moving up, and I think now we're coming back into that weekly support, and we can potentially move higher off of those levels. So I think for right now, let's see how it reacts. I think potentially we go higher from here. The Nasdaq was also down a little bit. Again, this one did not break out, so this one is still in consolidation. And the Dow was up 11 points, and you can see here this is the strongest of the three, but this could potentially be a short-term reversal signal with the gravestone doji that was put in on Friday afternoon. So as far as our positions go, again, we're in 10 positions. Apple down a little bit, 0.82%. You could see how it's pretty much navigating this consolidation. Our stop is still 97.90. ADM, again, opened higher, closed lower, but you can see overall we are still trending higher. We're going to be able to move our stop right now to that 49.12 area that we've talked about in the past, being these closing lows from 821 and 826, and now the 50-day moving average is above that level. So we'll actually take and move our stop up, make this trailing stop gray, and this one will go to red. Right, so that's our new trailing stop in ADM. American Tower, we talked about this a couple times, how I could potentially see this easily rolling over and stopping us out. Looks like that may be what's happening here. So 94.20 is our stop level. Disney continues to move sideways in that tight consolidation. I think another week or so of this sideways movement bring us right into that trend line. The 50-day moving average will be high enough, and we'll be pushing right over into the weekly trend line as well, looking for a bounce higher. Expedia, again, came right back into the 50-day moving average. This potentially could play out to be our new trailing stop level around here, around 85. You can see it did not close below 85 yet. But in order for that to be our new stop level, we would need to see a move over 88.40 and a break of this downtrend line, which it hasn't done yet. Okay, it tried to on Friday, but you could see with the close, we were right back below that trend line. So for right now, 82.55 is the stop in Expedia. Fidelity, again, bounced off that 50-day moving average, fairly weak. So again, this is another one that doesn't look like it really bounced and sustained any type of real buying pressure. So I could easily see this one on a couple down days reverse and stop us out at 56.40. But if that's the case, that's the case, and we will take the exit. General Dynamics up 0.13%. Again, just continues to march higher. Right now, 121.37 is going to be our new stop. You can see that 50-day moving average is pretty much right at it. Here we go again. There we go. Okay, so we're going to replace that. We're going to make this gray. Show the progression of our stops. And we're going to make this red. All right. H&R Block continues to move sideways. Again, you could see this 50-day moving average is starting to come over the top of it. Okay, so I think what may happen is this 50-day moving average will start to trend lower. This may continue sideways, similar to what we would see on a stock trending higher, we're now seeing in the reverse. So 50-day moving average would come down. This would continue sideways, eventually break down below 31.97, and at that point, if you were into shorting the stock, you can do so. We would obviously be stopped out at 31.97, and if you wanted to, you could short it and put your closing stop above 32.50. LUV, this was down 1.9%. This is called a bearish engulfing pattern. All right, we've talked about this in the past, but essentially what happens is it moves higher, or it opens higher and closes lower, and it engulfs the entire body of the previous day. That is typically a reversal signal. So let's see if that continues to play out. Our next stop level is going to be this 31.71. Right now we're using 29.38. Again, we're just waiting for that 50-day moving average to move higher. But to be honest, if this pulled back and maybe consolidated, I think that would be a good setup, because this is an okay position to move our stop to. I would rather see something a little bit more substantial, something more along the lines of what happened here throughout the end of July. 5 days sideways for me isn't really a great reference, but that's all we have to go off of right now. But for right now, 29.38 remains that stop. RSG just continues to move sideways. All right, similar to Disney. Longer this moves sideways, 50-day moving average moves up, trend line comes into play, and hopefully then we can get another breakout over this 39 level.
So I just want to take a minute to go over the 3 trades we exited this week. First one being APD. APD, we were able to raise our stop from 127 to 128.65, and sure enough, that level was broken on 9/11. Therefore, we exited the trade on the 12th, and sure enough, on the 13th, it decided to bottom and rally higher, breaking this downtrend line that we had intact. So looking back, we did follow the plan. We raised stop. Maybe we raised stop too quick, but I'm not too concerned with the way this played out. As far as I'm looking at it now, it is essentially setting up one big box trade. All right, one big consolidation here, because you can see how on Thursday it tried to break through that 137 area and did not happen, and you could see again on Friday it tried to move higher and was sold into. So for right now, APD is on the sidelines. Again, we took a small loss in the trade. I think it was I think it was something around 0.92 or something along those lines. So we were able to not take a full loss, but unfortunately it did hold that stop level, or I'm sorry, that gap level at 127, and decided to rally against us. The next one is EQR, and you can see this was a good example of an exit. All right, so just as we have the bad example in our exit, there's a good side to it. We had EQR sold into heavily, tried to hold that 64.08 level, could not do it. We ended up selling right here at the open on let's see, that would be the 15th, and sure enough came down and is still moving lower. So this one is definitely a broken stock. You could see on the weekly chart it broke down well below the weekly trend line. So for right now, EQR is off the table. Good exit for a small loss. And the last one, Tesoro, again broke that 61.77 level and has now been consolidating, so pretty much right around where we sold into. And again, Tesoro looks like it potentially may be setting up another box, a little bit of a bigger box consolidation that we would be waiting on a break over, say 66, and potentially using this 61.50 area as a new stop. But for right now, those are not setting up the way I would like to see it, so they're off the table. I just wanted to review those exits and you just see how they played out for the rest of the week. So let's move on.
All right, so that was a review of our positions. Here's what the model portfolio looks like. We are again 10 positions, 9 of which are positive. Let's actually sort these by R real quick and get rid of, there we go. So you can see how the Those three positions we exited early in the week, APD, EQR, and Tesoro, those are all now in the closed position section, and we lost 0.31, 0.56, and 0.92. Okay, so 0.92 is pushing the upper limits, but you can see here the other two are essentially where we want it to be, when we take a loss. But for right now, we have $5,600 in open profit. Our best position is LUV at a 2.02 gain, and the next one ADM, AMT, so on and so forth. The only stock that we have down right now is H&R Block, and right now we are down 0.61. Okay, so looking at the portfolio, I think it's structured well. Eventually, we're definitely not taking any more discretionary plays, and for that matter, you can see here the 149.41%. We are essentially maxing out our margin, or at least as far as I would want to take it. I would like to only be 50% margin, because that's how I would normally trade my own portfolio. So I would never really push the limits of that. But for right now, 50% is fine. We've had 8 closed trades, 10 open trades, and out of the 8 closed trades, we've actually only had one open, one actual profitable trade that we've closed. And that's typically of what happens, all right, because we're closing a lot of small losers, and we're letting the winners run. So obviously the losers are going to be what is primarily in the closed trades, and the winners are going to be in the open trades. So for that matter, like I said, we're sitting right around $103,000. So if we look at our performance, you could see last week was a killer. That, not going to lie about that, that took us from a little over a 6% gain right to a 3% gain, while the market really didn't pull back much. And sure enough, we actually added about $500 this week, about 0.5%, and the market turned around and added a little under 0.75%. So you can see how the market is starting to kind of take over those gains. It's starting to outperform the portfolio a little bit in the last few weeks. Not a huge concern, and to be honest, I only really use the benchmark for you guys. The fact is, the S&P does not go through what we go through as far as commissions and other fees that are associated with trading. So you look at it with a little bit of a grain of salt, but the fact right now is we have outperformed the market every week since the beginning of the start of the model portfolio. So for right now, I'm happy with it. I kind of wish that last week wasn't as big of a loss as it was, but you know what? Our trend, you could see on this faint blue line, is still higher and more steep than the S&P trend. So for right now, I'm fine with everything. Like I said, we're not going to be taking too many more positions for right now. So let's take a look at our weekly watch list and see what's coming up for this week.
All right, so before we get into the weekly watch list, I just wanted to cover one stock that triggered on Friday that was on last week's watch list. So that one is Dr. Pepper Snapple Group, DPS. So you can see we had identified a breakout over 63.50 being the trigger point. That happened on Friday. You could see the nice uptrend that's intact. And if you were going to enter this trade, I would recommend putting your stop right here at the 60.45 level. That would essentially put you below the 50-day moving average and the trend line. All right, so right there, 60.40. And you could see, again, pretty much a well-defined stock, well-defined setup. You would need to break not only this consolidation low, you would need to break the trend line, the 50-day, and this previous low from back here. So that looks like a good trade to get going here. Again, we're not going to be taking that trade just because of the allocation in the portfolio. I like to keep it at probably 10 positions. So let's run through our new watch list. Alcoa we had on last week. You could see that testing the bottom of the consolidation. We're looking at two areas here. A breakout over 1730 would be the trigger, and then you have your stop somewhere around the 16 level. ABC is a new one. This one, again, you can see that the uptrend is very well intact on the weekly chart. All right, we're moving higher. We're consolidating on the weekly. On the daily chart, again, here's the consolidation. Here's your trend line. Something, obviously broke that initial trend line. Now it's moving sideways. So a breakout over 78.50 would be the trigger on ABC. APC, Anadarko Petroleum. This one's been on the watch list for the past couple weeks. You can see it's consolidating pretty much between 112 and 104. So let's see how that continues. If that it obviously has broken some trend lines, it's really just consolidating at this point. I think maybe it wants to test this weekly trend line. So right now it looks weak. It's pretty much sitting below the 50-day moving average for the past 2 weeks, but it doesn't necessarily mean it can't reverse and push higher. CTL, again, we added that last week. We were looking at a breakout over, right tool for the right job, breaking out 41.50, and then we would be able to set a stop down here at 38.50. Estee Lauder, again, just moving sideways. All right, continues to move sideways. We're still waiting on that breakout over 76.95. EMC, again, continues to move sideways. Tried to break out this week, was rejected at that $30 level, but I think if we can continue to move sideways here, setting up for a nice play. You can also see going back to the middle of 2012, March, April area, it basically topped out at $30. So this could be one big consolidation on EMC, but for right now we're not playing it like that. I think if we can get that break over $30, then we would run. Home Depot, we've talked about in the past, setting up a new consolidation area. All right, so as it moves sideways, that 50-day moving average comes into play. It broke this downtrend line, so we can take that out. But you can see here on the weekly, it's a nice looking setup, right? We basically broke out from a weekly. We now moved sideways on the daily. So as we've always talked about, after a weekly breakout, very typically it will consolidate on the daily, and that's when we would take our entry. So that's exactly what's happening. We're just waiting for that basically to set up for us. Now if it continues and breaks out over, say, 94, if you're aggressive, you could take the trade and put your stop here at 88, or you can go ahead and put your stop down here 86.50. Preferably what I would rather see is this come back down, test the bottom of this box again, and then allow that 50-day moving average a little bit more time to move up, and then break out over 94, because then I have two bottoms at 88. The 50-day moving average is right, pretty much would be at 88, and then that breakout over 94, nice tight stop, good setup. All right, so just because it's something you want to be in doesn't necessarily mean it's the right setup. Hess, again, this one's continued to move sideways for the past, let's see, 3 months. So continues to move sideways. We're still waiting, I think, for that breakout. It would have to probably be somewhere over the 101, 102 area. HOT, this one was on the list and it came off the list. Now it's back on the list. But you could see here, essentially, it's consolidating between the 50-day moving average and this support, this resistance area right here at 84, 85. Okay, so that will be what we're waiting for, that break over 80, 84, 50, 85, and then you could probably set your stop here at, say, 82.50, or if you were a little bit more lenient, you could probably set it all the way down here, 78, and still be able to size your position with under a 10% stop. HPQ, this one's been on a tear lately. I'm surprised we've missed it, but that is what it is. You can see there on the weekly chart, nice trend line higher. Daily chart, we had a couple breakouts. We had this breakout, broke out, came back, now it's testing. So then I would consider this to be a new consolidation. All right, so for us on the daily chart, here's your trend line coming right through there, pretty much coinciding with the 50-day moving average. Your stop would potentially be 36.25, but you're waiting on a breakout over 38. 38. Intel, again, it's been on the list for a while. It's pretty much consolidating nice and tight below that 35 level, But you could see here on the weekly chart, I mean, this one is very well extended as far as how fast and how far it's run. So I would not be surprised to see this one just meander sideways for the next, month or two. JWN, similar situation. All right, we had the nice gap higher, and it's pretty much gone sideways. We're still waiting for that breakout. I would say over 70.50 would need to close over. Kroger, this was again on the list, off the list. It's now back on the list. Broke out, and now what did it do? It basically consolidated again. So if you missed it the first time, I would be waiting on a breakout over 52.50, and most likely still setting the stop either down here at 48 or right in this area at 49.50 area. LEG, okay, new one for the list. You could see here a weekly chart. Trend is higher. We're over that resistance from back here in the middle or the beginning of 2013. All right, so we cleared that 35 resistance. We're now consolidating again. And if you look here on the daily, this is a little bit of a tighter situation. Nice tight breakout here, or consolidation right here between 34.75 and 35.50. And what I'm looking at is using these two lows as the trend line. And if we were to enter this trade, I think your first stop would want to be probably somewhere either right at these highs at 33.50 or at 32.50. So depending on where it breaks out, how it breaks out, if it continues to move sideways, again, if this continues to move sideways for another 3-4 weeks and that 50-day moving average can come higher and that trend line becomes more into play, then obviously we would maybe be using 34.50. So until it breaks out, it's hard to see exactly where that stop would be, but those are a couple areas that it could potentially be. Merck, this one again is on the list, off the list. You can see we had that area of consolidation back here in the middle of June. Broke down, now it reversed and now is breaking higher. So on Merck, what I would be looking at is basically something like that, where you're using the 61.22, and actually let's get rid of remove drawing, price level 1, there you go, and 59.50. All right, again, still waiting on that 50-day moving average to catch up. Trend is fairly flat, so this could very easily be the top of the channel in Merck. You could see there. So maybe we'll see. Again, if you look at the weekly chart, though, it looks like a good setup to move higher. The NASDAQ OMX group, NDAQ, again, on the weekly chart, nice uptrend intact. On the daily chart, here's your uptrend. Again, a very accelerated uptrend, well above the 50-day moving average. Here's your consolidation that I am looking at. And your support and resistance. Resistance at 44, support 43, let's say. If you were to enter this trade on a break over 44, I would be setting your stop down here at the previous low of 41.50. That again brings that trend line break, the 50-day, and two lows would have to break to exit that trade. If you were aggressive, trading options or something like that, you could very easily set it at 43. Just know that you could very well come back and test that 50 and bounce off the 50-day. RHI, another one from last week, trying to push over that 51.50 area. You could see it was rejected on Friday, so we're still waiting on that. TE Connectivity, this one had a rough Friday, actually a rough week. So again, waiting on the breakout over 64.09, but it does look as though 60.88 is going to break first, and which would take it off the list. And you could see at that point we would also be breaking the weekly trend line, so therefore no go, and that would be an exit even if you were long on that longer term trend. TXN, again on the weekly chart, nice uptrend higher. Okay, something through there. So that's been an uptrend for about a year and a half, almost 2 years actually, 2 years. And you can see now what's happening is essentially we're consolidating in this huge range on the weekly chart. All right, so we would be waiting for a break over 49.50 which would put us at all-time highs. And if that were the case, I think you could either use 47 or 45.50 as your stop levels. Tyco, again, nice uptrend higher on the weekly chart. Nice and intact. Came back in. Now it's sitting pretty much right at support of the weekly chart. And if you look at the daily chart, it's a little bit of a different setup, but this is actually would potentially be breaking a downtrend line and this uptrend. All right, so see how it breaks. I would say you're really waiting for a break over 45.20 and a stop below 43.70. All right, WDC down 1.06%. You can see we're still waiting on that break over 103. We're starting to break to the downside. We're now below the 50-day moving average. But again, if you look at that weekly chart, we're sitting right at support. So I would not be surprised to see this bounce and eventually take out that 103 area. But again, let's see, because it has been weak over the last few days. Windstream Holdings, again, just moving sideways in that nice tight range after this move higher. I think in this one, if we can get that break over 1166, then potentially could test this 1250 area. And the last one, WMB, moving sideways, starting to break that downtrend, broke the 50-day. You could see it's now spent most of the week below the 50-day moving average, which it hasn't done in a long time. We would still wait for that break. I would say over 59.50, call it 60 just to be safe, and we would then be using 55 as our stop. So that's the watch list for this week, guys. I hope that helps you with your trading and it'll set up a nice plan for the upcoming week. We have obvious buy and sell points. So thanks for watching. Please be sure to subscribe to the nightly recap and the YouTube channel, and follow me on StockTwits, Twitter, and Google Plus for all future updates. And have a great rest of the weekend. We'll see you on Monday, guys. Take care.